How you doing this evening over there? We had a 1 hour change, so we were discussing with my wife, how come this hour change could affect you, because now we have the same time difference, and I was explaining that it was asynchronous, asynchronous. Je sais plus parler anglais. I forgot my English. But we had a nice conversation with Diane on stress. But now we're doing session number 4, onboarding Emmanuel to smart contracts to Bitcoin. And we're going to discuss Miami coin and city coins. So how do you feel today?
Before the last session with Diane, I was stressed, but now I would say I'm no longer stressed because I'm no longer focusing on the exam. I'm just focusing on studying. Yeah, so it's fine.
Right. Exactly. So I wrote, focusing on, preparing or having the actions to study rather than stressing on the outcome of the exam. Yeah. It might be a great way to go. So, okay, so today, what was the agenda? What can we do with Miami coins? Can you give us like a little maybe intro of what you understood about Miami coin or city coins? And maybe we can go through that a little bit together and then address the agenda of what can we do with Miami coins.
Okay.
In a very stressless way. Okay.
Of course. Okay. From my study, the Miami coin is like a way to support, or city coin is like a way to support your favorite cities. What I focused on majorly was the Miami coin itself for the city of Miami. And in this, it's a way to support the city of Miami, either as a stacker and a miner. Two components, major components, the miners and the stackers. For the miners, they give away stacks. They put stacks in a smart contract for the opportunity to get stable coins, but in this case, Miami coin. And the stacks that is put into the mining contract, which is like stacks blockchain, yeah, is 30% goes to the wallet of Miami City, and the 70% is stacked by stackers, goes to stackers, who then stacks this 70% of the Miami coin they received as a result of the initial stacks that was put into the smart contract. And with that, it kind of limits the Miami coin in circulation and value. Yeah, increases its value. Yes.
Okay. Maybe I want to share a few screens. Let's see. Okay. About Miami coin. So I think you did a lot of homework. Actually, you're pretty versed. So you said that it's your favorite way to support your city. Mm-hmm. You talked about miners, smart contract, stackers, and then the 30% donation, which proceeds from the miners, that goes to a wallet that only the city of Miami controls, right?
Yeah.
So I think this is pretty technical, right? So here I'm on mining.com, Miami mining /statistics, which shows, do you know what this is?
Okay. An engineer will say it's like a decline curve.
So exactly. So it says STX committed. And you talked about miners sending their STX in a smart contract for a chance to win a Miami coin reward.
Yeah.
And this is the amount that is currently being sent by miners, by the total amount of stacks being sent by miners per block. You see there's blocks. And I think these are like, they are I think they are ultimately going on the Bitcoin block because it goes through stacks and Bitcoin.
Bitcoin.
And so maybe we can comment these numbers. So, and then here you have stacking, you have Explorer. So it says 12,418 blocks mined. Okay. It says 2.6 million Miami coin claimed. And it says, what does it say?
That's like 1,990,274,697 Miami coins stuck.
Stacked, okay. And then
total committed 27,637,535 stacks committed.
Okay. So I think this is since the beginning of mining of this project, miners have committed 26 million stacks, 30% of which has gone to the city of Miami. I think. I don't know if this is still total committed. Is it since the beginning? But I think so. And then this is the total amount of Miami that they have won collectively, right? So this has to do with mining, right?
Yeah.
Let's go to Explorer. And so we can see, for example, here in this block currently, there are 12 miners. The reward of this block is 100,000 Miami coin. And they are committing the equivalent of 1,000 stacks, $2,000. Okay.
Yeah.
We can even see the miners here, their wallet address. So for example, this miner is sending 248 stacks, and he's got a 23% chance of winning being elected, like of being awarded the reward. Okay, and then there's another one. He's sending 205 stacks, and he's got 19% chance, and so forth. And there is, I think there's one that is sending 0.1%, 0.1 stacks. Actually, this person is a famous developer in the space. His name is, I think it's Fridger, but I'm not sure. But we see this is public information. Okay.
Yeah.
And okay, and so this is the pending block. They have a chance of winning 100,000 Miami coin, and they're collectively sending around 1,000 stacks. Okay, 30% of which is being sent to Miami, a wallet that is under Miami's authority, let's say, and 70% of which is being sent to the stackers, who are people who own Miami coin, and they lock it through time, and by doing so they participate in the consensus mechanism, and they are rewarded with a pro rata of the total stacking of the 70% of stacks being sent by the miners. Make sense?
Yeah.
Okay. All of this is quite technical, right? So, but so do you understand mining at this point?
Not really.
Okay. So if I'm a miner, for example, I'm sending 248 stacks here. There is a random kind of like, it's like kind of like a raffle or a lottery. And it's pro rata the total amount of stacks committed. So if I commit 248 stacks and there's a total commitment of 900 or 1,000, then I have a 26% chance of being elected or being rewarded, becoming the winner of the reward of this block. And every block has 100,000 Miami coins as a reward. So I'm spending this amount. It's almost like a lottery ticket that is pro rata the total commitment. And then I have a probability of winning the reward. Okay?
Yeah.
So if I do it once, I send 248 stacks. I have 26% chance of winning. So either I win or I lose, right? If I lose, I just lost this amount, like in a lottery. If I win, then yeah, I spent 248 stacks, but I also won
100 Miami coin.
Exactly.
100,000 actually. Wow.
100,000, yes. And maybe we can say something to the
one question. They all have in different percentages probabilities of winning, of course. And does it mean if I contribute more stacks, then I'm obviously going to win? Because there's somebody with just 0.1 stacks, and is there a chance that the one with 0.1%?
There is a chance. Yeah.
Wow.
There's,
okay.
There's a chance, and it's higher than the lottery ticket that you buy at the lottery for millions of millions, right?
Yeah.
So what miners do is they probably don't spend everything in one block because if they do so, they don't win, then they lose all of their capital at once. And then there's the law of la loi des grands nombres en français. On dit ça en anglais.
Law of multiple numbers, great numbers, large numbers.
Voilà. This is a mathematic law of large numbers that gives you, if you have a, let's say, I don't know, I think I have a spreadsheet of this somewhere. CD coins, but you are basically, you won't be, if you have 1,000 stacks to spend to mine, let's say, you will not put everything in one block, but you will buy tickets from different blocks, and it will increase your probability to win at least one block, and sometimes even you know more or less the standard deviation and the number of blocks you are probably going to win. Like thanks to this law of large numbers, you know that you have a good chance of winning X number of blocks if you spread your capital, if you spread your stacks in several blocks, 100 blocks, 250 blocks, and it reduces your risk of losing all of it, and you can optimize your chances of winning a certain number of blocks. So you basically have a certain number of blocks that you are going to win with a high percentage of chance, and you have a cost. And so you can deduce, since when you win a reward that has monetary value. Right now it's 2.5 cents of a dollar. So you can deduce the potential profit that you will make from that, or loss if it turns out. Yeah, but you won't be losing it all. Okay, so there is a probabilistic distribution, and the more capital you have, the more you can spread, and the less the odds of losing. And it's actually obviously the price will change, so there is some technical aspects to that, but basically you're spending a stack, which is Stacks is this blockchain, okay, that is a proceeds of Bitcoin, which represents digital energy. So there's value to this, and so you have a cost, and you're winning a Miami coin in exchange for that. Okay.
Yeah.
Any questions?
None so far.
Okay. Okay. So there was a spreadsheet with the calculation of this. Where is it? I forgot. Okay. How about stacking?
Okay.
So I think you defined that already.
Yeah, the 70% of the initial stacks that was given to the smart contract goes in for stacking.
Voilà. So stacking is locking your Miami coin in this case. So on the one
Yeah.
end, you have stacks, on the other end, you have Miami coins.
Miami coins, yeah.
So you lock these Miami coins and you proceed, you are being paid a yield in stacks. So all the miners are spending these stacks for a chance to win a Miami coin, as we saw with this probabilistic, just like business. They 30% of these stacks, there was 1,000 stacks, right, being spent by all the miners in the current block. 30% of that 300 stacks is being sent to Miami, and 70% of that 700 is being sent to stackers. So there is this amount of Miami coin stacked. And so if you lock a percentage, let's say 10% of this or 1% of this, then you get 1% of 700 stacks after the cycle finishes. The cycle is around 2 weeks. Okay.
Okay.
So you essentially get a yield. And what it does is you are holding Miami coins and you receive a yield in stacks. And remember that this asset stacks, you can also lock these stacks to receive a yield in Bitcoin through a similar mechanism. Remember that?
Yeah. Okay, but this is like well, I say a reversible exchange, kind of, because from the beginning you had stacks, which you put into a smart contract, and you got Miami coin, and then the Miami coin, it's like going back into a contract or so and coming back as stacks. So it's like
voilà. Yes. Ouais, exactement. Exactly. So what's the whole purpose of Miami coin? I mean, this is great, technically speaking, okay? We've got Miami coin that is built on top of stacks, and stack is built on top of Bitcoin. And you've got all this basically digital energy flowing through these different blockchains. And you, as a miner, you can mine Miami coin. So it's actually a only mine project, meaning that at inception, nobody had any Miami coin. The only way to get your hands on a Miami coin was to be a miner and to spend this economic cost stacks for a chance to win a Miami coin. And doing it in a proper way, you know, would give you a certain odds of, you know, not losing it all and having something reasonably profitable. And actually it was very profitable at the beginning of the project because the price went up a lot, but it's a different subject. But the point was nobody was a founder with a percentage of Miami coin attributed to them. It was open mine. Anybody could mine. Anybody can mine, actually. You can mine, you only need stacks to mine Miami coin. So that was my point, that this is open and it's open and it's mine only at inception. Okay. So the whole purpose of this Miami coin, I think I sent you an article.
Yeah, I think
it was a little bit technical, but yeah.
Of I think the mayor of Miami, Suarez, he said something like it's a way of inviting investors who do not necessarily need to be in person in Miami, but it's like moving their assets in a digital space in a way to support the city of Miami. And one of the advantages is if the project is successful, the tax rate can be reduced or even be cancelled totally for those living in Miami. I think it's one of the uses.
Interesting. Yes. So there is what's the link between Miami, the city of Miami, and Miami coin? And have you seen this picture I sent you?
Yeah, you did.
So what's the link? We already said what was the link, but
What's the link?
between the city of Miami and Miami
City
coin?
City coin?
So what does the city of Miami, what's the role that the city of Miami is playing in the city coin, in the Miami coin project, in the Miami coin economy, in the Miami coin?
What is the word? I think it's more like, okay, let me summarize it. I can't remember the exact word he used. It's more like,
So yeah, if we look at this picture, what does it say?
17,752,038 contributed to your city by Miami coin.
Voila. Well, that's the link actually, that Miami coin is a project that was mine only, and it was launched by a community of independent miners. And the only link that it has with Miami is that baked into the protocol, as we already said, there is this automatic donation to a wallet that is destined to be Miami, right? The Miami is that, you know, they will be the receiver, the beneficiaries of this donation. That's the only link. So they have actually, they didn't play, you know, especially at the beginning, they didn't play any, you know, role in defining the technology or being
accepting the fact that
right,
this is for them and they want to be part of it. So it's more like an acceptance. Yeah, that's what he said.
Right, they are accepting this donation after doing some due diligence about the technology, about you know, the benefits of this coin, and okay, and so what does it do? Like, what is what's the whole purpose of this coin? So baked into the protocol, 30% of the mining proceeds are being sent to a wallet that the city of Miami can decide to accept at any point. That's right. That's a major piece here. And why is it interesting? It's a difficult question, huh?
I'm really thinking about that. Why?
But maybe we can have a look at this article that was written by Alex Go BTC together. Okay. Alex is a protocol that is a DeFi protocol being built on top of stacks, and they wrote this article about city coins and why they think it is pretty a pretty disruptive and new concept and tool for cities. Did you read this article?
Yeah, I think I did.
So maybe we can read one or two paragraphs.
Okay. Oh yeah, I did. I read it. I remember this. So
they're saying the same here. There was no pre-mine, no ICO. It was launched by the community of independent miners. Okay. They're talking about Austin coin and New York as well, with a new mayor that has signaled that you know, Miami coin was something that he might be interested for the city of New York. And here they summarize it. I think we already saw this maybe you can read this and yeah.
Okay.
Or
Can I go on? Okay. How does it work? To summarize how Miami Coin functions, there are essentially two components, miners and stackers. The miners give away stacks to be put in a smart contract for the opportunity to win Miami Coin. The
okay,
stacks that the miners.
How,
Okay.
so we saw that in details today, and it varies, right? We saw that currently in a block, there's 1,000 stacks being committed, and they have a chance, and there's a winner that has a chance of winning 100,000
Miami
coin, which is, so 1,000 stacks is about $2,000, and 100,000 Miami coin is how much? It's
I have no idea.
wow. So it's is it 2,500?
Yeah, kinda.
Because it's
Approximately.
100,000, right?
Yeah.
So 1,000 would be 24, and 100,000. So they're all committing around $2,000, and they have a chance, when one winner has a chance of winning 2,500, and then they do it through different blocks so that it is not unprofitable for them to do. Okay. Just want to mention that Miami coin is around 2.5 cents. You follow, Manu?
Yeah.
Okay. If you have a question, let me know. Like, why is it profitable or not? You know,
you explained that already.
Right. The highest bid was 250 stacks. So he's probably doing it through, I don't know how many blocks, and he has a probability of winning X number of blocks, which multiplied by 2.5 cents and compared to the amount that he's sending in stacks and dollars makes it profitable.
Yeah. Okay. The stacks that the miners put into the mining smart contract goes into the city wallet of Miami, 30% of that, and to the wallet of the stackers, 70%. The stackers stack. The stackers stack their Miami coin and receive a passive stack reward and limit the Miami supply on the market. The stackers can take their stacks reward and mine their own Miami or stack the stacks to earn BTC.
Voila. So I just want to make sure, but we already talked about all of this, didn't we?
Yeah, we have.
Okay. So then the article goes on and talks about if your city wanted to raise funds, what were the options before city coins existed, right? They could tax the citizens, the city constituents, right? And they do. They could request funds at the state or federal level, right?
Yeah.
And they could take on debt in the form of municipal bonds. And then they go on and explain how these, and so obviously the taxes come in play because it reimburses the municipal bonds and the interest rate that goes with it, right?
Yeah.
So your mayor would take basically a loan in the market, and then they still do, and then they tax the citizens, and they use part of these proceeds to reimburse the loan. But with the loan, they can, build a stadium, they can repair their streets, they can do all sorts of things, build shelters for people, etc. Yeah.
Yeah.
And then it goes on and explain what these municipal bonds imply in terms of interest rate risk, credit risk. Credit risk has to do with the quality of the signature of your city. If it's a city that is being managed well, if it's not losing money, then probably the interest rate that I will pay will be less than if it's a city that has a track record of spending too much and losing money. Then the markets will probably loan them, but at a higher interest rate. Okay.
Okay.
And then they go on and they explain what liquidity risk. Sometimes in the market, nobody wants to, if you want to sell if you are an investor in these muni bonds, you are stuck with them, let's say. And they also explain about a call risk, which is if you are an investor in these muni bonds, the city would have the option, but not the obligation to reimburse, to basically cancel the loan. And you as an investor, you no longer receive the interest rate or the capital potential appreciation of the muni bond that you hold, because it's being reimbursed at par plus accrued interest rate. So, but these are technical things. What happened? Sorry. They give more details. Oh, this is an interesting point, though.
Okay. More importantly, do consider this. How many average citizens do you know of that hold muni bonds? Hardly any. The muni bonds market is hardly a community, so much as groups interested in the tax discount municipal bonds offer.
Well, the investors in these muni bonds are not your normal citizen. They are pretty wealthy in organizations. And so it's not for everyone to be an investor in the muni bond market. And here they give a proof. Okay, insurance companies hold these muni bonds, mutual funds, ETFs, banks, households. Okay,
household.
I know what that means exactly.
Larger percentage of households.
We'll ask them. Households. Okay. Okay. And then they also talk about something that has to do with muni bonds and their being tax exempt and how it compares in terms of yields. This is also technical. Okay. Now let's go to this to understand why city coins, why Miami being the first of all city coins and very successful so far. Why is it such a new tool compared to the possibilities of cities in terms of getting funded by not only, let's say, institutional investors, but your normal citizen, your normal city constituent? Go ahead, you can read.
Okay. Compared to traditional funding options, Citycoin eliminates social risk, political risk, interest rate risk. Since no one is being asked to pay taxes to fund Miami Coin, you do not have social risk. Okay. There are no political battles with state and federal government. Post. Miami Coin is not a fiat currency and currency leveraged asset. As such, it is not impacted by sovereign interest rate risk.
Okay. So do you understand all of this? Let's see. So interest rate risk is obvious. Okay, it's not a bond. Okay, it doesn't have interest rate. If the city is not well managed, interest rates can go up also because they explained here there's the free interest rate that is built on top of US treasuries. So if the US hikes interest rates, then you as a city, you will pay more interest rate because it is correlated. And then your signature, if you are a bad payer, if you don't pay well, then you pay even more interest rate. So in city coins, there's all of this is canceled. There's no interest rate in city coins because it's simply miners accepting to donate 30% of what they spent to the city. There's no loan. The city is a donation. The city is not paying any interest rate. Okay. All of this is canceled. No, none of this is a risk for city coins. Okay. Political and interest rate risk. Okay. Social risk. Since no one is being asked to pay taxes. Okay. I think they explain further what they mean by social risk.
By social risk, yeah.
Yeah. No one pays taxes with Miami coin, right?
Yeah.
You don't pay taxes as a consequence of a city in need of repaying a loan, for example. Okay. This is voluntary, like this is independent. This is done independently of state or federal governments. Okay. And same, it's not built on top of the US dollars. It's built on top of Bitcoin. Okay. So the US dollar, this is what I was talking about. It's the same basically. It's the free interest rate, the US Treasury interest rate. Okay. All right. What else do they say? Where was it? I'm lost. Okay.
Yeah. Therefore,
this is interesting. Yeah.
Therefore, investing in city coin is like assessing the equity component of a city's capital structure, as opposed to the fixed income component, mini bonds. Once there are dozens of city coins, people can invest in diversified portfolios of different city coins.
Yeah, it is okay. So it says it compares more to the equity component of a city, rather than the fixed income. So it's not like the city. You're not an investor in the loan that a city makes, but more like directly invested, almost like in the shares of a city. If a city, almost like the stock, the stock of a city. It compares almost like a stock in terms of how it behaves. This is what they pretend it is. Okay. So obviously there is risk. This is important to also mention, I think. What are the risks? So when you invest in a stock compared to investing in a debt component, like a bond, do you know like the differences in terms of how it behaves?
In a stock and in a bond?
Yeah. So the bond is like a loan, and a stock is you have a share of a company, and you.
Yeah. Okay, but for the stock, it's dependent on performance of the company.
Voila. Right.
So if the company is not doing well, you get very poor returns.
Voila, exactement. If the company is not doing well, you can, there's a different behavior. But yes, it's more volatile. So when it does really well, you can profit from that. When it does really poorly, you will lose from that.
Yeah.
Instead, just to make it really simple, I'm not going into any details, but in a bond, when you invest in the loan of the company, when the company is doing well or poorly, if it's not going bankrupt, you have a chance of being reimbursed. Even when it goes bankrupt, you will be senior in terms of they will liquidate the assets of the company, and they will start by paying the employees, and then paying the people who they owe money to, and then if there's any money left, then they will repay some of the shareholders. So shareholders have more risk, let's say. So there is risk to this. If city coins compare more to stocks, like the equity component of a city, then there is risk, but there's also reward. More reward when the company does well and you own the share, then you also participate in that success. When you own the loan, no, you're just going to get paid your interest rate, regardless of whether it does well or poorly. Make sense? If it doesn't go bankrupt, you'll get your money back plus interest. Let's see what Alex Go thinks the risks are.
Okay, as Miami coin is backed by Bitcoin through stacks, its price may exhibit the same high volatility. Okay, that makes sense. Okay. To give an idea of how volatile, the annualized volatility of Bitcoin is approximately 6 times greater than the annualized volatility of the SP 500. What is the SP 500?
Right, Standard & Poor's 500. These are it's an index of the 500 biggest market cap companies and the price of their stocks. So the 500 biggest companies, they aggregate the price into an index. So that index of these are already stocks is much, I mean, the Bitcoin is much more volatile than that index. It's just to give you an idea of how volatile it is. Right? It's very volatile. It goes up and down a lot.
Up and down, yeah. Okay. It is also possible that if everyone sold their Miami coin at once, the price could drop to near zero. Yeah.
Right. When a company faces bankruptcy, there can be some panic from the market, and the shareholders start selling in mass, and then the price dramatically falls.
Yes, like having more supply than demand.
So. Right. Exactly. In this case, yeah, if there's a panic and everybody starts selling and there's no demand, exactly, this could happen. It could also happen with bonds, to be honest. It has happened with bonds in 2008. But yeah, let's continue.
Okay. With technology comes technology risk. Though the Bitcoin blockchain is the most secure network in human history, any project involving significant funds will attract hackers that set your protocol exploits over hackers.
Okay, so there also signal another type of risk, which is technology risk. That when you deploy a technology on the blockchain, at the beginning, it might still have some potential exploits or bugs, and hackers might want to hack that and exploit the smart contract. But as time goes by, you know, all these exploits might have been exploited and corrected or patched, and the technology becomes more reliable.
Right.
But there are also market risks for muni bonds that they didn't mention. But yeah, okay, that's true. Okay, and maybe the most important point now, in terms of democracy and tool for cities. Why is it so? You know, why is it such a big deal, if at all?
What we appreciate most about Miami Coin's success is the civic engagement it creates. Okay, municipal bonds are financial instruments. Period. Miami Coin has unlimited potential because it is a unity project. The opportunity for citizens to be involved and feel even a small piece of ownership cannot be underestimated. CityCoin creates a world where the citizens have a positive outlook on what the government does because they have a stake in it. And the government has a stake in them. Okay. There is minimal civic engagement with municipal bonds. With Miami Coin, holders worldwide have a direct interest in the continuing prosperity of Miami City and are therefore more motivated to care about and participate in local elections. Non-residents can participate through political organizing. Okay.
You understand all of this?
More or less.
Why?
Yes.
So just like you can own a stock from a company, and when the company does well, you do well because you basically incur a profit. In this case, it's a bit similar. You can own Miami Coin, and if Miami Coin does well, then the price of Miami Coin will go up. Why? Why will the price of Miami coin go up if it goes well? Well, more people go to Miami. The coin itself might be used for different use cases. What can you use it for?
Okay, I think probably they could use that for shopping within the city of Miami, general economic activities within the city. I think that would improve the value of the coin if it is accepted as a means of payment within the city of Miami. Then to
So
contribute
yeah,
to
so
its increase.
regardless of how regulators will come in and regulate coins, city coins, we could imagine that the coin would serve different use cases and acquire utility. So as you said, shopping, or you could have discounts. Holding the coin could give you some benefits. For example, you could unlock a city bike by just locking your Miami coin. It would give you could use the yield from locking of that Miami coin to pay for your subscription of the city bike. Instead of paying in principal, you'll pay with the yield. The stacking yield that you receive in stacks.
Yeah.
So you buy some Miami coins, you lock them, and then you dedicate the yield to the company who's in charge of managing these city bikes, and now you have a subscription almost for free because your principal is not being affected. You could unlock a workspaces by holding Miami coin, a proof of hold they say. So with your phone, you would unlock a meeting, well, all sorts of benefits and discounts, or anything any service, that a library, for example, you could have a subscription at a library, and all sorts of things that I don't know of because they haven't been invented. We're very early in what we can do with this. But you basically use this coin, which creates utility and creates also fees, and for the blockchain. So the blockchain is successful as it is being used by Miami, and Miami used the funds, the donation, to improve the life in Miami, the city of Miami. And so if it uses it well, it contributes to the economy goes up, and you as a holder, your share also goes up. So that's the potential that I see. Make sense?
Yeah, makes sense.
So yeah, Alex Go is saying here, you have a direct interest in the continuity prosperity. So it can go up a lot if it goes well, right? It depends. You also have to look at, what's how much supply and demand, how much, what's the quantity of Miami coin there is, what's demand, etc. Price is not only driven by the economy, but also by supply and demand.
Yeah.
Okay. But this is not the case with muni bonds. First of all, muni bonds are not accessible to all. This Miami coin is accessible to everyone. Yeah. And then you as a citizen of Miami, you can, if it does well, you do well as well. Okay. Also, there could be other use cases, I think, also civic use cases, because you could vote for how you want the city of Miami to use these funds. The 30% donation, which is around $17 or $20 million already, after it's been launched only for a few months. And they're going to use these funds to create a school, I think, and to create all sorts of initiatives. And eventually, you mentioned that you could end up by offsetting the need to go to the market and have a loan, because you're receiving all these funds. Now, you don't need this multi-million or hundreds of millions of dollars to build a stadium, because you've got it from the Miami coin protocol. Okay?
Yeah. Okay. Another key
If you have any
feature,
question, let me know, because I'm speaking.
this is a little bit on my level, kind of. Okay. Another key feature.
It's still so great because you contribute to the community directly, and it's not, it's not being done passively. It's a way to vote also for you with your money, right?
Yeah.
If you, but let's continue.
Another key feature and distinction is that Miami Coin is programmable and municipal bonds are certainly not. This further increases on community participation by allowing developers and other content creators to use the platform to add value to the city. The possibilities are endless, from holding even a single Miami coin, providing special access and discount in Miami City, to token holders being able to vote on what they want to spend the money on, the purest form of direct democracy. Yeah, this is democracy.
Right. So this 30% donation, 20 million, Miami can decide at their own, they're totally sovereign on what they want to do, but the holders of Miami Coin could give them, could vote, and that vote could be taken into consideration by the city leaders in terms of what could be done with this donation. Okay.
Yeah.
Okay. I think we're covered a lot. And also this statement. How do you interpret this statement?
Miami Coin is a statement that people have value. Okay, Miami Coin values their energy, their creativity, and their commitment. Okay, I would say this is more like because everybody is involved in it. It's more like Miami Coin gives opportunity for people to contribute to what goes on in their city, to add value to their community. Okay, we lack this in the community. We can do this, and I have the means through the contribution that I have made, because I am part of those who is contributing the 30%. So from this 30%, I am deciding to add value in this area of my community.
Why?
I think it's more like saying everyone has a right within the community to decide in what direction the community should go.
Why? This is also different from being a shareholder of a company, where if the company does well, you do well, but you have no say in, unless you're shareholders and you vote.
Company.
Yeah, you have no share in the business of a company. Here, if you're a citizen, if you own a shop, a coffee shop, for example, you could participate. You could do something that makes Miami Coin to win, and therefore you'll win. So it's almost like the city belongs to the citizens a little bit, and then the coin as well. It will do whatever the community wants it to do. And then everything in terms of demand and supply is written in code and can be verified by anyone, and you don't need to trust a central party for that. So it's setting the set of a game that is pretty transparent, verifiable, and you can become an actor of the success of the coin if you with your own initiatives. Make sense?
Yeah, makes sense.
Okay, maybe we want to conclude 11:30. I had other stuff, but we can have a conclusion with the other stuff of what can we do with Miami Coin. But maybe let's this article was really good. Is there something else that you want to discuss about this?
Yeah, I was just thinking, since the coin is basically based on when I say the interest of the citizens of a particular city, the city coin is based on the interest of the interest, the rate at which they participate in with the use of this stuff. Does that not say the rate of the coin is also affected by or the success of the city coin is kind of affected by human behavior? If I prefer to probably use my coins for something else. I don't know if I'm putting the question in the right way, but
So they have a docs that explain how the coin is engineered and how the protocol works. But I'm not sure I understand your question. Yes, I mean, you can buy, you can sell, you can, if you buy CD coin, then you are bullish the city. If you sell, then you're bearish. You can mine it, you can stack it, and then you can create all these apps. It's programmable, so you could create protocols on top of it, like smart contracts. What's your question?
looking at the situation, maybe I just get a whole lot of Miami coin and do nothing with it. So what happens in that situation? Does that affect the value?
Je suis pas sûr d'avoir compris.
Oh, I'm looking at a situation where I'm in possession of maybe a large amount of the Miami coins, and then I do nothing with it. I just want to hold it. Does
Right.
that affect the value in any way?
Devalue it?
Does that affect the value of the coin itself if I am having a large amount of it and I don't use it for anything?
Well, if you don't want to use it, I would advise you to lock it in the protocol so you get paid a yield in stacks. But if you're not using it, that's a good question. So you would be reducing the supply that's available. So I'm not sure what it would do, but it would probably be in favor of having the price to appreciate, because it will be scarce, and if for the same demand, yeah.
Absolutely. Yeah.
There's lots of things in play in blockchains, game theory, engineering of the token itself, of the protocol. So it's not there's no easy questions, I think. Okay, maybe we can go to answer the questions that I wanted to answer at the beginning, which is to conclude, what can we do with Miami coin today?
Today?
Yeah. So I think I sent you a few things that we can already do, and we just discussed that we can stack them, we can mine them, we can buy and sell them. And today I think there's
we can swap them on an exchange.
There's an exchange that provides that facility, a centralized exchange called OKCoin. What else can you do? You can buy an NFT on a marketplace with Miami coin today.
Negotiate tax credit. Yeah, that's part of it.
Right. You could in the future potentially negotiate a tax credit, because, well, by holding these Miami coins, well, to answer your question, you would contribute actually to accrue the value of the Miami coin and help the city succeed. And so it could potentially be like, I think one of the city lead explains this better than me, but you could potentially calculate, how much it favors the city, and therefore negotiate a tax credit, because by favoring the city, you create a positive return for them. Okay.
Yeah.
So we discussed this, vote for how city funds are allocated. I discussed this a little bit. When you log your coins, it could give you certain benefits, like access to an office space, some discounts. I like the idea of city bikes.
City bikes, yeah, I was about saying that.
Buying an NFT, I think there's a product that you can buy NFTs using Miami coins. We did all of these. I think this is pretty much what you can do today with some speculation.
Yeah,
What
no,
did you
but
think of this Miami
negotiation.
coin? What's your general feeling about all of this?
Uh, it's more like, yeah, I would say cities keep going in this direction or may end up replacing fiscal cash with digital currencies in the future to come. But it's a welcome idea because it gives the citizens of a city a certain kind of control or decision-making power as to what the community needs and in what direction the community should go. And then if there are some needs, we can, okay, for countries like, let's say, in developing countries where it takes a lot of time to access government funds and state funds and federal funds, this could go a long way in maintenance of some public facilities meant for the good of the people. So it's actually a welcome idea. Then for the issue of negotiating tax credit, I really still I'm still trying to get my head around that because I feel if it gets to a point where they negotiate a reduction in the amount of tax each citizen is supposed to pay because of the contribution coming from the city coin, it may get to a point where the leaders of the city would feel like, okay, since you're no longer paying this much amount of tax and the tax you paid before was meant for a certain purpose, they may want to have, will I say, a larger control or decision making. Will I say, have a larger power when it comes to making decisions as to what to do with the money? Because, of course, you're not paying as much tax as you used to pay, and there's some businesses that the city must take care of course. So I feel that might be an issue with that.
That's interesting. So essentially, we would be in a situation where Citicoin would be so successful that it would offset the need of taxes and loans, and the cities would have the city constituents or the people who own the city coins would have as a powerful say in what to do with the coins, and then so the city leaders would feel that they have no say in what they can do. But I don't think that's the promise here. I think that the way it works as a donation, and the city leaders still, we're not replacing. It's not replacing the laws and how cities work and all of this. The cities leaders still have total say on what they want to do with the donation. So even in a scenario where a city coin would be so successful that the city would be able to cover all of its needs and reimburse the loans they have, it would still be of the city leaders' decision on what to do. And this vote we're talking about is more like a proxy of, okay, we are the ones participating in the coin, so we're definitely supporting the city, and this is our suggestion of what we would like to see. But you're still the leader. We vote for you, and this is a donation, and you decide. But it's I think you said that. I think you said the major point that you don't have to wait. There's no. It's city constituents can participate right away. They can contribute right away. They can give a voice, and it's economic voice, so it's impactful. It's just not wishful thinking. They're saying, hey, we're contributing to this. We're creating. Also, another point that I might add up that Alex does is it's programmable. So all these programs on the blockchains are public goods, and once I create a Lego program for how to use the yield of the stacking for example, city bikes, I could reuse that program for anything else, for library, for any type of other service, getting discounts, or I don't know, proof of hodl, right? So this is also, these two components are very new. The fact that, yeah, it is permissionless civic engagement, that the community can take that into their own hands and also signal their support to the city like economically speaking, and being part of the winning of the city when it does. And at the same time, it's programmable, which is and programmable on a blockchain. So everybody sees that, and all these Lego blocks can be reused and combined in different ways. So it's compounding. It's compounding wins somehow. I'm trying to express myself the best I can in English here. I know I'm struggling a little bit, but so let me do this thing. I will send you a few stacks, and for next week, maybe your task would be to see how you can swap your stacks for Miami coins through maybe a catamaran swap, and then stack these Miami coins, or I don't know, do something with your Miami coins.
Okay.
So I'll send you stacks. Your mission will be to acquire Miami coin. I will help you through that, and then you'll decide what to do with them. You can buy an NFT. I didn't show there's an NFT. There's an NFT collection that was launched not long ago that you could mint only using Miami coins. Forgot the name. Badgers. But you could buy an NFT. By the way, yeah, we have lots of NFTs that were donated to us. We're electing them, and yeah, we're still receiving, you know, donations, NFT donations, or stacks donations directly. So there's two ways to do this. You either send it to me or you send it to Emmanuel. You decide. It is permissionless. You can send your stacks, like a proceeds of your stacks, or even Miami coin if you want to, or an NFT directly to Emmanuel. Or if you send to me, you'll send only NFTs. I don't accept anything else. Otherwise, I'll send it back to Emmanuel. And then there'll be an election that's for the saviors of Divya, to reward them for saving Divya. And your NFT that you donate to me would either end up being for the saviors or for Emmanuel. That's it for us today. Je rame un peu. All right. Un mot de conclusion? A conclusion? About city coins?
Okay.
New York is going to be launched very soon, I hear. New York City coin. Yeah. And Austin.
Yeah. And Austin.
In Texas.
And each city coin has its own value, of course.
Yes.
Depending on the performance of each city.
Voilà. Okay, that was a great conclusion. No, you want another conclusion?
Oh, no. I have my work to go do. Study.
Okay. Thank you so much for your time. So keep in touch. I'll send you a few stacks. Again, your mission will be to acquire Miami coins, probably through a catamaran swap. I'll show you how. And then you'll give us a little bit of feedback about that for next week.
Okay, then.
Merci beaucoup, Manu. Et surtout, quoi qu'il arrive, garde ta flamme intacte. Ouais, focus sur focus on your studies.
I'll try.
Merci beaucoup, Emmanuel. Je sais que t'es busy. Tchuss.